Hey guys, welcome to the Silver Report. Here we are. It's Sunday, March 19th, 2017. We have gold currently trading at $1,229.80. Silver's trading at $17.47. A shocking price. What we're seeing is the Bitcoin right now is trading at $998.88. More losses. And the reason behind this is there is fears among speculators, because some of the largest Bitcoin groups have decided that there may be coming a fork, may be coming a split between a certain number of the people, a large number, a significant number, close to 30% of the chain, splitting into two different chains. So departing from what is the current Bitcoin format and devolving into others. And this is something that we've been seeing rising recently, which should be a threat to this idea of a cryptocurrency, because there is a rising waves of cryptocurrency forming. And there's lots of alternatives forming. And whenever there is so many being created, they're coming to a crest alongside of this main wave of Bitcoin that is going through. Because Bitcoin, we've seen, has had some significant success. But what we're seeing on the outskirts is all of these other cryptocurrencies are gathering steam, as well as Bitcoin itself. The people there, they want to break off into two different Bitcoins in order to be able to, they see it's extremely profitable dealing and being involved with Bitcoin. They see that it's extremely profitable being the man holding the money. So, the groups that are involved at the top of Bitcoin, they figure they want more of that money for themselves and less for others. They want more of the profits to go to themselves. So, and in other news, what we're seeing is that China's property bubble is continuing to grow. It's even bigger now. The Chinese property bubble is even growing larger. There's little that can do about it. And despite the risks posed by China's financial system, by the country's housing market, policymakers are likely to tolerate the bubble rather than introduce further measures to cool the market. The key takeaway from a Deutsche Bank special report on China's property market: China's property market has become a key driver of growth and fiscal expansion in recent years. So a lot of their growth is derived from the property market, but since they have, and it's a vital pillar of their economy. Months back, we had heard that there was talk of George Soros going and buying massive amounts of gold because he feared the Chinese property market. He feared that we are facing exactly what we saw with Lehman Brothers coming out of China, and it's going to cause devastating effects on the world economy. He also had sold 37% of his shares, and he went and he bought stock in gold. And so what we're seeing, he did retract some of that. But there were several partners that he had out there, and they have not. They retracted just briefly during the election of Donald Trump, but they're now buying gold again. And what we're seeing, the wealth effect may be helping to sustain consumption within China despite the slowing income growth, and this is why the government may not decide to pop the bubble. The wealth effect leads to lower savings, boosting demand for goods and services both domestically and internationally. The Chinese overseas travel expenditure reached 3.1% of GDP versus 2.2% in 2015. So the overall service trade deficit offset more than half of the goods trade surplus. If this market cools, it may result in a collapse in the tax revenue. So they're on very shaky ground. The property and the construction sector, they accounted for 33% and 15% of local government tax revenue growth, respectively, between 2010 and 2015. The two sectors accounted for 43% of local administration tax revenue compared to just 11% from manufacturing. So arguably, China's largest industrial sector is this housing market. Total land sale revenue that went into local government extra budgetary funds, it's likely reached renminbi 3.1 trillion in 2015. So that's equivalent of 49% of the tax revenue. And it's not slowed down. And we see that it will impact the Chinese government significantly as a result of this mounting housing bubble. And things are only getting worse. In 18 of China's 37 largest cities, the ratio between property and wealth increase in disposable income was above 1, and for 9 cities the ratio was above 2. So as China's economic growth slows, policymakers will be more willing to let the bubble continue to inspire consumer spending and growth and keep construction sector at recent highs. It's hard to forecast the peak of this property bubble, but we can think about constraints that may trigger its deflation. And these 3 constraints are among them: higher interest rates, the aging population, and the slowdown in urbanization. All these 3 things are a significant threat to not only their stock market, but the U.S. stock market, which is why these major millionaires like George Soros are pulling money out of the stock market and putting it into gold. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos. I thank you guys all so much for stopping by. As always, stay safe.